So in this section, I'm going to show you how to short bear flags. So bear flags are retracement patterns when you have major dumps. So we showed how to trade bounce plays, but you could also close and then short to maximize profit gains. So I like to use fib retracements for this. So measure from the top, anchor it to the bottom, right about there. And you could see it came up in between the 50 to 61.8% area. So you could have a general sweet spot zone between here and here. Now, it doesn't have to be exact, right? As long as you get the general range. So you can short there, maybe size and partial size. I wouldn't use excessive leverage for something like this. If things did V-bottom and then it breaks up above 78%, then you could just set a stop to get out of the position right there, whether it's a mental or a hard stop. So that's one example. Generally speaking, if you do it on the very first move down, you'll have a much higher probability than, let's say, if you did it on the third wave down, even a higher probability than the second. So I'll show you another example. Let's measure the second move down. We can see that it hits 61.8% on the nose. And we'll back test and I'll show you some other examples on larger time frames. So we can even look at this on the daily. So that's the hourly chart. Now here's a very similar thing playing out on the daily chart. Right? So for this bigger move, it came up and it retraced all the way up to the 78% level. Generally speaking, I wouldn't use really high leverage when swing trading. You want to go with low leverage, right? If you're scalping, you could use higher leverage. But generally speaking, I would just set my stops above. For a big move like this, I would just set my stops above the previous all-time high, right? So it kind of gives some wiggle room there. As you can see, this hit 78 on the nose and then just kind of rolled over and dropped probably, close to about close to $200, right? Not exact, but somewhere around there. And this could roll over some more, right? So this might not be finished. So you can see another example of that right here on this dump. Hits that sweet spot area. Between 61 and 78% retracement right here, and then it just kind of drops, bounces, and then rolls over again. Let's look at it on some other time frames over here. So you see this massive dump back here. We could see it hit the 78% level and then completely rolled over. So it's a lower high. So you can see it gets weaker, right? Huge washout, nice bounce play, retracement. This is like counterforce. So momentum, counterforce, momentum, and then counterforce, and then you ride it again. So I find these bounce plays and shorting bear flags to be the one of the most easiest patterns to trade, and you'll often see the same pattern playing itself out over and over again, just kind of like fractals, because the markets just behave in a very similar way and repeat themselves on various different time frames. So let's look at that with an altcoin. Let's take Ethereum for example. Now this works better on liquid markets, so I'm showing Ethereum because it's a more liquid market. But as we can see here, it just kind of creeps up right in between 50 and 61.8% retracement. And as we can see here, And this lines up also with head and shoulders too. Again, hits the same area, right? So you have the head and shoulders and being able to short this bear flag for a breakdown pattern. So that's it for this lesson. I'll see you in the next section. Cheers.